Adele, ons kan maar begin as jy reg is. Good evening, everyone. My name is Charles, but I'll leave my introduction for a bit later. I'm just waiting for Adele to take us through the initial slides. Adele, I'm ready when you are.
Okay, thank you, Charles. Good evening. Just a few notes before you join these sessions. I don't know if you've joined any sessions in the first semester, but I think it's just important for you to know that these are not tutorial classes that we are offering. They are facilitation classes, which means that we will not take, your facilitator will not take you step by step through the content of your study material, but the focus is more on the skills that you require to pass this module. And your facilitator will obviously preempt those skills, but you're also welcome to say in your classes with Charles, look, can you please focus in some other session on these topics because we really struggle with them. So we want this to be an open environment where you can negotiate with your facilitator on what to cover in these sessions. In addition to the online sessions, you will also have the opportunity to have one-on-one sessions with Charles. And as from next week, we will be sending out the necessary query forms that you complete and you submit it. It's all online submissions, and then Charles will receive your queries and he will inform you how he's going to make contact with you to address your queries. So please make use of that service. And also bear in mind that those sessions are 30 minutes each, and they can take place on this platform where Charles can give you a call from the Teams platform, or he can have a live chat with you, or he can email you. It's all open to how you do it with Charles. Just in terms of late coming, students have the opportunity to negotiate with Charles in terms of, does the day suit all of you? Is there a reason why you would like to move the day? That's between you and Charles. We don't interfere with that. We just initially book these sessions to make sure that we look at the schedules and make sure that there are no clashes. So please feel free, if this date or day doesn't suit you, speak to Charles so that he can see if we can move these times around. And then people who come late into class, you are welcome just to join, but just make sure your microphone and your camera is switched off so that you don't disturb the class. And we're not going to address any technical matters in this class unless Charles decides, wait, I can assist you, because he knows Teams very well. So we're very, very fortunate to have him as a facilitator. So please talk to Charles about these kind of things. But technical queries should be sent to the CT and TUT email that we sent in your email. So please feel free that if you struggle here, but I think it's relatively easy now. It's just a link to get into these sessions. And then please ensure that you, for tonight, while we're still getting going with our first sessions, that you at least put your student number in the chat option, and Charles will show you where that is on your bar on your screen. Normally between the hand and the two little people, if you click on that, then you are in the chat section. Just type in your student number there, because attendance is very important for Charles to have proof that he has conducted the session. And then there will be a little evaluation form and end with 4 questions just to determine, are you interested in attending these sessions going forward, or are you actually okay? Can we maybe reconsider and take another module where there's more help needed? So please feel free to do that. I will post both links into the chat section so that you can just click on the links to complete the attendance register and also to complete the evaluation form. So Charles, thank you very much for joining the team. We are fortunate to have you. He's an experienced man in this field. So please make use of him. Don't be shy. And good luck with these sessions, Charles. Over to you.
Thanks for the introductions, Adele. I really appreciate it, and welcome to everyone. Just to go over some of the stuff that Adele has just explained. We're going to make use of Teams a lot. Obviously, that's the platform we're working on. But I do also realize that a lot of you have never worked on Teams. So I'm going to explain some of the uses of Teams as well, and how I would like us to conduct these sessions. Because at the end of the day, it is for you to get the most out of these facilitation sessions. As Adela said, I am not the tutor. I facilitate with specific issues that you might have in the content, and then obviously at the end is to make sure that you have the necessary skill to go into the exam prepared and write the exam to get the most marks out of that one opportunity that you might have. So in Teams, if you have a question, you will see there's a function where you can raise your hand. I will try and make sure that I keep my eye on the screen and follow whoever's got a question, and then I will pause and I will allow that question. But for all the other times, please make sure that your mic is muted. Some of the noises can come through quite loudly, and you don't really realize it. I'm just switching my camera on so you guys can see who I am. So yeah, once again, welcome. And then on the introductory notes, do we have any questions so far? Any questions that you guys would like to ask while Adele is still present? And between me and Adele, we can try and assist with those technical, more UNISA related questions. Gone. Adele, then I'm going to dive right into the work, if that's okay. Didn't see any hands. Let me just get the right material on the screen. Okay, guys, first thing, so this is the facilitation class for FAC2601, where we will specifically look at companies and their financial statements. And obviously, as I've just mentioned, it is important that we identify the necessary skills that you need to pass the exam. I will focus a lot in these sessions on exam technique, as I believe that is where most of accounting students struggle. Is they get into the exam and they're sitting at that desk and they have got no idea where to start. And it's not actually a case of you not knowing the content of the work. It's you don't know how to start, where to start, and make use of that limited time. Because I can promise you, and I'm sure all of you can agree on that, seeing that this is definitely not the first accounting module that you have, you hardly ever finish an accounting paper. And there's a technique that you can follow to make sure that you get the most marks out of that facilitation session. For tonight, I'm not going to rely heavily on the slides. I've got a few slides that I just want to go through just to make sure we have a structure. And then I'm going to go straight to the study guide. I want us to focus on the study guide and what you need to understand and what is important. So your tutor will discuss most of the things with you. This facilitation is to zoom in on specific topics and make sure you know how to read it and what to take note of. Okay, so first up, let's look at the background of companies. What is a company? A company is an association between persons that work together with the aim of making a profit. That's the most basic explanation of what is a company. Secondly, a company is an entity, is a legal person which is incorporated in terms of the Companies Act. So what is meant by legal person? These type of questions is stuff that can come up in your multiple choice section of your question paper, and that's mostly where you see it. What is meant by a legal person? The Companies Act actually describes a legal person or a legal entity as someone that has got all the attributes of a natural person, except for the fact that it can't get married and it can't adopt children. So that's literally the two distinguishing factors that the Companies Act makes a difference between a natural person and a legal entity. So a company has got all the other rights than a natural person. An entity exists independently from its owners, the shareholders. So although the shareholders can own the company, they do not have any say in the company except for where they can exercise their voting rights. The people who are in charge of the company are the directors, and they are governed by a specific section in the Companies Act where they must always make sure that their actions, they can prove that their actions are in the best interest of the company. Okay, so why form a company? So there's multiple reasons why you would rather want a company than a sole proprietorship. Firstly, the acquisition of more capital. You can issue shares, so you have a more open platform to raise more capital than you normally would through a bank. To ensure the continued existence of a company, we all know a sole proprietor and a partnership. Once one of the partners leave the partnership for whatever reason, the partnership ceases to exist, it dissolves, and a new partnership is formed. So the old partnership goes away, a new one forms. A sole proprietor only exists as long as the sole proprietor does. So creating a company, the company can have an indefinite existence. To prove an easy way to exchange owners, we all know that most companies, the shares are transferable, meaning that you can sell your shares to anyone and the continuance of the company is not affected at all. To provide a procedure to limit the financial liability to the owners. If you're a shareholder and a company is liquidated, you as the shareholder will not be held liable. However, the actions of the directors will be placed under scrutiny. But you as a shareholder, your car and your house are not affected personally. Whereas with a sole proprietor and a partnership, they can be held liable in their personal capacity for any losses suffered by the company or the partnership or the sole proprietorship. So then we have capital and share. So we have multiple shareholders, make it impractical to have a capital account for each of these shareholders. So again, I'm drawing this comparison between a partnership and sole proprietorship and a company, so you can see the differences. For a sole proprietor and a partnership, we have a capital account for each member. Anyone that contributes capital to that organization, they have a capital account. Whereas with a company, we don't have a capital account for each and every shareholder. I mean, some companies have got thousands of shareholders. So we create one account, one capital account, but with multiple shareholders that contribute to that specific, that ordinary share capital that we will speak of a bit later in the session. The capital of a company is therefore divided into small units called shares, and shares are transferable, and the share certificate is the proof that you have those shares. Shareholders share in the profits through dividends, something very important to take note of here. If we talk about shares in general, the company has got no obligation to pay dividends to shareholders. Yes, it will eventually affect the value of the shares. You are not going to, I mean, you guys won't invest in a company that doesn't yield any form of return. So we do expect a dividend. However, it is not a legal obligation to pay a dividend. The moment that something becomes a legal obligation to pay, it ceases to be equity and it becomes a liability. Because a liability is where we have a legal obligation to pay money to someone. So as long as it doesn't have that legal obligation, it can be treated as share capital. So always remember that of a dividend. But having said that, in an exam, you can be asked a question, and the question can be, is the paying of a dividend a requirement? Is it does it become a liability? So there's a specific point when a company crosses the Rubicon, if I can call it that, where it ceases to be no right to now suddenly an obligation to pay a dividend. And that is when they've declared a dividend. So at that point, when they declare a dividend, then there's no going back. They have to pay a dividend to all the shareholders that are registered at a specific date. So then the accounting treatment changes. And this is where the skill comes in, is where you have to read very carefully what the question says. Dates are extremely important. Always highlight your dates in share questions. They will say, on this day, the 28th of January, the company's directors decided to declare a dividend. So on that day, you created an account called Shareholders for Dividends. That is a liability account. I now owe my shareholders the dividend that I've declared. But before that day, there's no right, the shareholders have no right to a dividend. Okay, so please always remember dates are extremely important, and you must pay attention to what the question says. Otherwise, you will miss the fact that a dividend is declared. And the accounting treatment changes because it's no longer equity, it now becomes a liability. That part, the dividend section, becomes a liability. And shareholders for dividends will always be a current liability. Because current liability, the definition of a current liability is a liability that will be settled within the next 12 months. We will get to the annual financial statements in a bit. Okay, still staying with a company. Forming and regulating a company is formed by its founders. So the establishment of a company is regulated by the provisions of the Companies Act 71 of 2008. You can go in your study guide, there is a section that deals with the previous Companies Act. Just for your own background, it won't be examined. Please go and read through that and see where it comes from. It is important. Accounting is not just accounting. You need to understand the subject matter. You need to understand what is a company, why is it important, who regulates it. You need to have that background information to understand the accounting treatment thereof. So that's where the skills lie in these facilitation sessions, is that you need to understand the focus before you can understand the accounting treatment. So always make sure that you understand the background. It is not just there. It's extremely important that you understand. A company is incorporated by the lodging of a notice of incorporation and also the memorandum of incorporation. Let's look at the annual financial statements. Required by the Companies Act. What does AFS include? It firstly includes a statement of financial position. Statement of financial position is a summary of all your assets and your liabilities, and also your equity. One of the most important things that you need to understand here, and if you didn't grasp this in a previous module, you also need to make contact with me through those separate or individual facilitation sessions. You need to go back and make sure that you understand the whole exercise where you can determine how any transaction, any financial transaction, how it affects your balance sheet, how it affects your income statement, and specifically what in those statements. So if I buy a vehicle, it will be a negative under assets and also a plus under assets. I lose money, but I gain a vehicle. What kind of asset did I purchase? I purchased a fixed asset. So it's important to understand still those basic elements of the previous accounting 1501, 1502, 1601. You guys need to ensure that you understand those modules extremely well. And if you had any problems in those modules, you need to communicate them, because they will carry on into this module and you will still have the same problems if not bigger now than what you had previously. So this is a new opportunity to learn new things in accounting, but also to build on stuff that you should have already mastered. So you need to understand what you do not understand from the previous module. Always, that's extremely important. So make sure you understand the accounting equation. Any exercise in your previous modules, accounting equation is fundamentally one of the most important accounting exercises that you can do. If you do not understand the accounting equation, please make contact with me as soon as possible, as you will struggle with this unit, this module. It's a guarantee. That is one of the skills that you need to have for this module. You need to know how to treat certain financial statements of financial transactions. Otherwise, you will struggle, especially with this topic. You will not know how to treat the annual financial statements. And as we go through these questions, you guys will see that in this module, as opposed to some of your other accounting modules, you have so many bonus marks that you can score by completing an annual financial statement question logically. You might not have all the totals accurate, you might not have all the amounts in there, and you might actually think that you are failing, whereas you can get actually an extremely good mark if you follow the correct exam technique. So doing financial statements, one of the most important things is that you need to know what the structure looks like. If I tell you the statement of financial position, if I mention that name and you close your eyes, you need to see the structure of the statement of financial position in your mind immediately. That is something that you must memorize. You must know that structure. That structure will bring you marks. Because when the moment that they ask you to do the statement of financial position, you can already, without even looking at the given scenario, you can already draw a blank statement of financial position in your answer book, and then just fill in the blanks as you go through the question and read the details. Extremely important to understand that structures of all these statements. Next one, statement of comprehensive income. Again, you must know what that layout looks like. You must know that you have sales, cost of sales, other income, administration, distribution, and other expenses, financial expenses. You need to know that structure, because all the information is going to do is that the information is going to give you line items that you just need to slot into the structure. But if you don't know the structure, how can you do that? How can you even put it in there? And you get marks for putting it in there. If they ask you a depreciation line and you go and put it in the correct line in your statement of comprehensive income, and you've made a calculation error in your depreciation, you still get a mark for having put it in the correct place. If you will lose your mark in the calculation, but as opposed to losing 5 marks, you will now maybe lose 1 mark. So always, please, guys, I'm emphasizing this a lot, probably overemphasizing it, but please understand your structures and know what they look like. The cash flow statement, and then obviously the last one, the notes of the financial statement. They are also part of the AFS and just as important. Then the users of the financial statements. It's important to understand who uses the financial statements, because it will give you perspective as what you would have wanted to see in a set of financial statements if you had to make a decision. So any accounting transaction that will affect the user of the financial statements decisions, whatever that decision might be, that transaction needs to be in the financial statements. So that's how transparent the financial statements need to be. If it will affect anyone's decision on whatever matter, it needs to be in there. Please make sure that you understand that content in the study guide. So we have the owners, we have the potential investors, the banks, SARS, obviously, creditors and suppliers, and I think there's a few more in your study guide. Please make sure that you just go through them and understand why they would need it. Regulating. Annual financial statements must comply with IFRS. IFRS, International Financial Reporting Standards. The reason why IFRS are there, or is there, is that if you look at a set of financial statements, say for instance you want to go into a specific type of business, and you have a business opportunity in South Africa, and you have a similar or seemingly similar opportunity in Australia, the fact that their financial statements complies with IFRS will put you in the position to actually evaluate the South African set of financial statements against the Australian set of financial statements. And you will be able to make an informed decision because you know the way that they have treated inventory, for instance, in South Africa would have been the same treatment in Australia. So you can, although the currency is different, you can still do analytical analysis, you can still analyze the financial statements and use that information in your decision making, if it's better to invest in South Africa or better to invest in Australia. So that's the reason why IFRS is there and why it's so strictly adhered to. Let's look at shares. Firstly, you have authorized share capital. It's usually set out in the Memorandum of Incorporation, and you have issued share capital. Never let a question catch you. This is not the first time that you guys are dealing with shares, I believe. Authorized share capital, that's the share capital set out in the Memorandum of Incorporation. Issued share capital is the shares, it's the shares that's already in issue, the shares that you've already sold. Okay, so authorized is what you still can issue. Issued share capital is what is an issue. Then you get types of shares. We will be dealing with ordinary shares, preference shares, cumulative preference shares, and redeemable preference shares. Okay, so let's just have a quick discussion about these shares before we go to the study guide. Guys, as Adela has pointed out in the beginning, it is impossible to add value to you guys in this session if I have to go through the detail of the study guide. So I'm highlighting areas that I believe is important, and then you have to go through the study guide and make sure that you understand those sections and then get back to me if you don't. Otherwise, you are the one that's going to struggle in the exam with those questions. So I'm highlighting what you need to know, the level that you need to know it at, and then obviously, most important, the skill that you need to get from studying that section of the work and how you need to be able, sorry, I'm struggling on my own words here, how you need to be attempting those questions. That is what I want to bring to you guys. So you must put your hand up if you are struggling with any one of these items that we are discussing. Okay, so types of shares, ordinary shares, those are the most common shares. That's the most usually the shares that are distributed first. They are completely transferable. You can share them with anyone. You can sell them, like I said in the beginning, without the company's structure changing at all. Then you have preference shareholders. So preference shareholders, what the word preference gives to those shareholders is that when a dividend is declared, or it also depends on the type of preference share, but if a dividend is declared, dividends will first be paid out to the preference shareholders before it is paid out to the ordinary shares. So that's what the word preference means there. So if no dividend is declared, they also don't get a dividend. They have no right to the dividend. Cumulative preference shares is slightly different. They do have a right to each year's dividend. Okay, so how did that work? They don't have the right to claim it, but they have a right to, when dividends are declared, they can get dividends for each of the years that they didn't get a dividend. So to explain, say for instance you have 8% preference shares. Preference shares, yeah, let's use, let's say 10% preference shares, and you own 100 rands worth of preference shares. Your dividend that you are, or your dividend that you can expect, should a dividend be declared, that's the thing that must happen first. A dividend must be declared. You have no right to claim it before dividend is declared. But the dividend that you will get is 10% of your shareholding. So if your shareholding is 100 rand, your dividend will be 1 rand. Now let's say in year 1, no dividend is declared, but in year 2, we declare a dividend. if you're having normal preference shares, you still can only claim, or you can only expect the dividend in year 2. Same as ordinary shareholders. The only thing that you have as a preference above them is the fact that you must get your dividend. Cumulative preference shares, on the other hand, means that in year 2, if we now suddenly declare a dividend, they are entitled to the R1 of year 1 as well as the R1 of year 2. And that is what's making them cumulative preference shares, is that the years that they missed out on, they have a right to whenever a dividend is declared in the future. Can I, by using the hand in Teams, are there anyone that doesn't understand or that don't understand what I've just explained? If not, I'm continuing. Going once, going twice. Great. Redeemable preference shares are the more tricky one, and the one we will pause at when we get to an example. Redeemable preference shares mean the holder of a redeemable preference share has got the right to get his money back at a certain point in time for the shares. In other words, the company must buy those shares back. So it begs the question, and we will discuss this with a good example when we get to it. Is it now, and I want you guys to think about this, is it share capital or is it a liability? Remember, I said equity is something we don't owe to anyone. Equity is capital and other reserves. So share capital is equity. The moment that I have a legal obligation to pay someone, then it changes. Then it can't be equity anymore because money will flow out of the business. And if I have a redeemable preference share, it means it will be redeemed at a specific time in the future, which excludes it from equity. I want you guys to think about that, do a bit of research on that, and then we can discuss when we get to that specific section and the questions that can follow. So what type of share transactions can you expect specifically in the exam? Apart from the issuing of ordinary shares and the issuing of preference shares. Companies like to do capitalization shares. So what that means in a nutshell is if a company has got lots of reserves, it has accumulated profits over a few years, and they can actually give something back to shareholders. They are confronted with two questions, mainly. Do they have enough cash flow to pay out a nice dividend, or don't they? If they do, because you can have large reserves, but not enough cash, because your cash might be tied up in debt or creditors or debtors. So there might not always be favorable cash flow, but that doesn't exclude you from the fact of giving something back to shareholders. So what most companies then do is they make the decision of giving capitalization shares. So they will say, looking at our existing shareholders, for every 10 shares that you hold, we will give you 2 shares for free. So what they're actually doing, any reserve in your financial statements or any reserves in accounting has got a credit balance because equity increases on the credit side. So we will debit that reserve with the value of the capitalization shares, and we will take it to share capital. So all we did, without having any cash flow or affecting our cash flow, is we literally just increased our share capital balance by taking from one of our reserves and moving it to share capital. So that's what share capitalization means. Is there anyone that don't understand that principle? Going once, going twice, happy. If you're not happy, you guys can share afterwards. Adele, I'm not sure whether you're still listening in. I know you're recording the session. This must just be one point where I give my details out to the students if they want to send me communicate over via WhatsApp, etc. If Adele's not listening, I'll get back to you guys on that. Just remember to put those of you that might not have been here in the beginning, please send me your student numbers in the chat section of Teams. If you can locate the hand on your Teams bar, it's the icon just to the right of that hand. There's a chat icon. Click on it and then just comment your student number in there. Then I also have your contacts, and I can get hold of you to give you that information. Okay, so that's capitalization shares. Next is a rights issue. So a rights issue is where you where you are giving more shares out in the market, but you are limiting the population that can act on that issue. So what you will basically do there is you will tell your existing shareholders, you guys have the right to take up shares that is worth R2.50 per share for R2. Most of your shareholders will act on that, and they will purchase those shares and immediately sell them for R2.50 for a profit, which they are allowed to do. That's why we also refer to rights issue as a bonus issue. Then we get to underwriting, something I would like to explain there for those that aren't familiar with the term. We will also move, after this, we will be moving over to the study guide. So if a company wants to issue shares, they run the risk that not all of their shares will be taken up. Because why does a company issue shares? They need capital. They are in need of more capital, so they sell more shares to get that capital that they require, which is important for whatever reason they might have. So the risk that they run, as I've said, is that not all the shares that are issued are taken up. So they will contact an underwriter. An underwriter will then consult with the company, and they will get to an agreement where they say, okay, you want to issue 10,000 shares at a value of R2. Okay. So the total capital that you would like to raise through this issue is 20,000 Rand, 10,000 at R2. If you give me commission of 10%, I will take up all the shares that the public do not take up. Okay, so now we say we are happy with that, and we pay the commission. The commission is the 10,000 shares times the R2 times the 10% commission. So that will give you 2,000 Rand. That's the commission that we pay. That's the amount that we pay for the risk that the underwriter is taking. Okay, but we are covering ourselves, and we are actually ensuring that we will at least get 20,000 Rand share capital that flows into the company. That 2,000 Rand commission is a direct expense. So that's the treatment for that. So assuming we issue all the shares, all 10,000 of them, but 2,000 aren't taken up, then the underwriter will give us 4,000 Rand for those shares. So they will purchase those shares at R2 for the 2,000. So that's underwriting. Obviously, there can be a situation where we agree with our underwriter that we only want to underwrite half of the risk. So using that same shortfall that I just used, where I said 10,000 is what we want to sell, but the public only ends up taking 8,000. So 2,000 the underwriter needs to take up. But we didn't know that in the beginning. So in the beginning, we could also have agreed that we only want to underwrite half the risk. So that means only 50%. Then the commission would have been 10,000 shares times R2 times 50% times 10%. Okay, so that would have given us R1,000 if I'm not making any calculation errors in my head here. So the commission would have been half, but so would the shares that the underwriter is willing to take up also be only half. So if the public fails to take up 2,000 shares, the underwriter is only liable to take up 1,000 shares. Everybody happy with that? Again, I'm throwing a question out there. Does anyone have a question on underwriting? Is everybody happy with the principle that we've discussed? You guys are quiet tonight. Hope it's not the cold weather. Okay, I'm going to leave that there, and then I'm going to move over to the study guide. Just give me a moment. Okay, the study guide is open on the screen that I'm sharing. If anyone can't see it, please let me know right away. Okay, so I'm over to Learning Unit 1, Learning Unit 2 now. So if I look at the schedule that you guys received, that what I would have loved to discuss tonight is the background on companies, the annual financial statements, the type of shares and share transactions, capitalization shares, rights issues and options, underwriting of shares and dividends. So we've actually covered most of that, but I would also like to touch on Learning Unit 2. So if you guys can just open Learning Unit 2, and then we can continue. I just want to highlight some of the important things that's in there. So it should go quick, and then we are done with this session. Okay, I'm on page 19, Learning Unit 3. Guys, there you can see what a complete set of annual financial statements look like. We've dealt with this earlier in my presentation: statement of financial position, statement of profit and loss and other comprehensive income, statement of changes in equity, the statement of cash flows. What I would like to explain quickly for you guys, and I would like if you guys can complete a similar exercise, is take a page and do this simple exercise. You will draw a column that says details. Then you will have a column for assets, a column for liabilities, and a column for equity. Okay. And always remember that assets equals equity plus liabilities. Everybody happy with that? No questions? So you will have a transaction, and I'm really going to ask you guys to please look at this exercise when you move over to the next section, which is inventory, because this will help you with the annual financial statements as well. It will guide you through IAS 1. Okay. Give yourself transactions or inventory type transactions. So let's say purchase inventory cash, 1,000 rand. How does it affect my assets? Firstly, you will say plus 1,000. And secondly, you will say minus 1,000. Why? Because there's an increase in inventory equals increase in assets. A decrease in cash, which equals a decrease in assets. Everybody happy with that? Any questions so far? What happens if I purchase inventory on credit? What happens to my structure then? Again, I increase, let's say, 2,000. Again, I have plus 2,000 for the same reason. But then also, I can't say it's a decrease in cash because I didn't use cash. I used credit. Credit is a liability. So under liabilities, I will now also say plus liabilities, and my accounting equation will balance because I have 2,000 on this side and 2,000 on that side. So %. Any questions that you guys might have at this stage? So this is how I would love you guys, well, only for your own benefit. This is the main skill that you need to have if you want to attempt any of the sections in this module. You need to have this basic understanding of accounting. And I know it looks simple right there, but each example that they give you in the study guide, see if you can do this simple exercise. You can make this exercise even further interesting by adding 2 more columns. And in the one you will say account to debit, credit. This is basic accounting, but I can promise you 80 to 90% of students who struggle with accounting cannot do this exercise for some of the most basic accounting transactions. And you need to understand how this works. So for the first one, you would have said, what account would I have debited? Inventory. What account would I have credited? Bang, because every debit has a credit and every credit has a debit. But you need to know which one, because inventory goes to my statement of account, statement of financial position. Where does it go to that statement of financial position? If I have a statement of financial position, and this is how your mind must work for accounting. If you can't follow this link from transaction level straight through to the financial statement level, we have a break. Something is broken there, and we need to attend to that before you advance in accounting. Otherwise, you will struggle. But don't think everything is lost. This you just need to do to understand where your problem lies. Where do we need to fix it? Your statement of financial position will always have non-current assets. What do you normally have under non-current assets? Property, plant and equipment. Property, plant and equipment, IAS 16. That is where we have buildings, vehicles, machinery, general equipment. That is where that is displayed. So it's all my non-current assets. Non-current assets are all those assets that I do not intend to sell or convert back into cash within the next 12 months. Everybody happy with that definition? Guys, you can interrupt me as well. You don't have to wait for me to ask a question. I would love us to use the hand functionality. If you see that I'm missing it, you can unmute yourself and ask a question and I will pause right there. Okay, so non-current assets, there are others, but I'm just going to leave it at that for now. Then we have current assets. What are the three most important ones? Inventory, debtors, what's the right name? Trade and other receivables. And we have cash and cash equivalents. So current assets are all those assets that can be converted into cash within the next 12 months. So that is the intent, is to convert it back into cash within the next 12 months. If I look at inventory, I don't buy inventory to have it lying in my storeroom for more than a year. That's not the reason why I bought it. Trade and other receivables. If you have a debtors policy that allows people to only repay you after a year, that is some liberal financing that you are running there. So that doesn't happen in practice. Some of you might have seen what a debtors age analysis looks like. If you haven't, go Google it. A debtors age analysis makes provision for 30 days, 60 days, 90 days, 120 days in arrears. So normal credit policies go to 30, maybe 60 days. In other words, it's well within a year that we expect to receive payment of it. So that's current assets. So now we have non-current assets and current assets, but we were still busy with a basic accounting question. What is the treatment for purchasing inventory cash? And can you immediately see two direct line items in my statement of financial position has been affected by one transaction? Inventory and cash equivalents. Because cash and cash equivalents is everything that is cash or similar. It's bank, it's petty cash, it's my float. So very important to know that all these basic accounting questions, I almost want to say they are basic for a reason. Because if you don't understand it at that level, I cannot see how you're supposed to understand it at this level. You're going to make a mistake in the way that you think, in the way that you argue and reason. So please use this to test yourself at this level. Let's look at the second one. I purchased inventory on credit. Again, the account that I need to debit is inventory. Again, a line in my statement of financial position. The second line can no longer be bank, but it needs to be account that needs to be credited. So there I've said increase in debt means an increase in liabilities. Liabilities increase on the credit side and decrease on the debit side. Increase on the credit side, decrease on the debit side. Creditors. Let's go back to my statement of financial position. So after I have the two assets, classes of assets, I have total assets. Then I start with the second part of my statement of financial position. First, we have equity. Under equity, we have share capital and usually retained earnings. Then I have my first section for liabilities, non-current liabilities. And here I want you guys to pay attention. And again, this is the skill that you need to have with accounting, is reading and paying attention to the finer details of how things are argued. Non-current assets are the assets that I intend or don't intend on converting to cash within the next year. I do not buy a vehicle for the company with the intent of selling it within 12 months. The delivery vehicle that I purchased, I plan on having for the next 4 years or 5 years, whatever its full depreciation period is. So definitely fixed asset. Non-current assets, fixed assets. Non-current liabilities, the way you need to say it is slightly different. it's also the 12-month period that's important, but it's the portion of liabilities that won't be paid within the next 12 months. So if I have a loan, the part of the loan that will be underneath non-current liabilities is the part of the loan that won't be paid within the next 12 months. So the portion of a long-term loan that I will settle within the next 12 months, that portion will go to current liabilities. But the portion that I will settle only after 12 months, that portion will remain under non-current liabilities. So I almost want to, I'm typing it, I'm saying it's the long-term portion of a loan. Then we have current liabilities. Current liabilities. If I go to my current assets, I have trade and other receivables. Here I have trade and other payables. And also the short-term portion of long-term loan. And something that I'm putting here, I'm putting it separate for a reason. Normally, companies have got more than one bank account, and this is something that you should also have taken note of in earlier modules of accounting. But just for clarity and background's sake, if you have a bank account, one is favorables, let's say it's your main bank account, it's a favorable bank account, and you have a secondary bank account for whatever reason, and that one is an overdraft. You cannot offset these two accounts and put one balance and say the overall offset, after you've offset it, it's now favorable, and put it under current assets. No offsetting is allowed. You need to show the positive bank under the current assets section and the negative bank overdraft under the current liability section. Okay, but where I want to get to is back to this simple exercise. This exercise. 2,000 Rand was purchased using a credit facility of a supplier. The creditor's account was credited and would go to my current liabilities under trade and other payables. So again, emphasizing the fact that if I didn't have the basic understanding of accounting, I would not have been able to accurately get to the amount that needs to be under trade and other payables. Are there any questions so far? Everybody happy? Please, guys, I want you to revisit this way of analyzing a transaction. It is really important that you understand it at that level. Only for your own sake, and to be able to use the financial statements to the best advantage. Just quickly go through the study material again. I'm not going to spend too much time on the content. Going concern. You guys should have heard that description before. Going concern means if a company is a going concern, it is reasonably expected that company will continue to carry on its normal business activities for at least the foreseeable future, which is the next 12 months. If a company has a problem with that it won't be able, or there's any reason to believe that it won't carry on as usual, the financial statements cannot be drafted as normal. The financial statements needs to be drafted in a way that makes the users of the financial statements aware of the fact that there is a possibility that the company may not carry on as a going concern for the next 12 months. You can ask yourself the question, if you want to invest your savings into shares. You guys know what happened to Sign-Off. Sign-Off was a company that had an average share price of close to 65 or plus rand per share. Say you planned on investing your money in that company. Would you have wanted to know that there might be a drop in the share value before you purchase? Of course you would have. So always put yourself in the position of the owners or the users of the financial statements when you make a decision in terms of should something be in the financial statements or shouldn't it. That's something just to think of. Accrual basis of accounting is something that you guys should have touched on as well on earlier models. It's just here for background purposes. The accrual basis of accounting is that we recognize a transaction when the transaction happens, not when the actual cash flow takes place. So the moment that income is earned, we recognize it. The moment that an expense is incurred, we recognize it. Just to give you some background explanation on that. Remember, income versus receipts. What is the main point to always remember there? Receipts does not equal income. Because someone might have paid you something you haven't earned yet. So you might have received money payment for something you have not yet earned. In that case, it equals a liability. If you've received money for something that you have not yet rendered or sold or delivered, you are not entitled to that money. It cannot be income to you. So we will recognize everything as it happened. So in that case, we would have said debit bank and credit income received in advance, which is a liability. So always please remember that. If you sold items or rendered a service for which you have not yet received payment, that equals an asset. Because someone owes you money, and the moment that someone owes you money, it is an asset to you because it is your money. The fact that it's with someone else doesn't make it their money. It is still your money. You've earned it, and that's the key word. For something to be income, it must be earned. So you've sold it, you've rendered the service, you earned it. So that income is yours. It's just not in the bank. But the treatment is still the same as for any other asset. You will debit the asset account and you will credit whatever you sold or whatever service you rendered, because the other leg is an income leg, and income equals equity, and equity increases on the credit side and decreases on the debit side. While I'm at that point, guys, please always remember this. Let's say this is the debit side and that's the credit side. I have assets, liabilities. What's wrong with my spelling tonight? Liabilities, equity, income, and expenses. Assets always increases on the debit side. Liability always decreases on the debit side. Same as equity, same as income. Expenses increase on the debit side. And the opposite for that side. Assets decrease on the credit side. Liabilities increase, equity increase, and income all increase on the credit side. And expenses decreases on the credit side. Guys, please, for those that haven't joined me in previous classes, that hasn't, for who I haven't been a facilitator before, some of those students will also tell you that I always harp on this. I always say, before you write your student number on your exam, you write down this in an accounting paper. You write assets, liabilities, equity, income, expenses, plus, minus, 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 plus, and minus, plus, 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 minus on the other side. Then you know it's out of your head and you can think about some other stuff. You can think and analyze the accounting treatment while looking at that way of dealing with debits and credits. Just something that you guys can use, or if you are happy with it, just use it as some revision. If I have to apply to this explanation that I've given you, if you've sold items or rendered a service for which you have not yet received payment, it's an asset. Okay, so I say that is an asset. So obviously the debit assets. Now I know accounting, double entry system. For every debit, there must be a credit. So now I know that the other leg must be on this side. But what side will it be? I've already said debit asset, because that's the money that that person or company owes me. I've sold something or I rendered a service. That is an income. I've earned the income, so I can recognize income. And that will be the same, the accounting treatment for that. So if you go back to this very simple explanation here at the top, if I've sold inventory on credit, let's say 1,500, there will immediately be a minus 1,500 under assets because I don't have that assets anymore. The asset is gone. Okay. But under equity, we will get to inventory, but under equity, there will now also be a minus 1,500 because I will be recognizing cost of sales expense. The account there is cost of sales, and that would be inventory. I sold it for 2,500, so let's say 2,700. So 2,700 will be plus 2,700 because even though we didn't receive the money, we still receive the debtor. So the money is not in the bank, but with a debtor. So plus 2,700. Let's maybe put that on a separate line. Let's put it there. So it's a plus 2,700. And now we need to recognize the equity portion or liability portion or another asset. So if I've sold it, I recognize 2,700 as an asset. So there's my debit already. So if I go down to this, what I've just given, I've already recognized the debit. I need to recognize the income now. So the account that I will be crediting, debiting first, is debtors. The debit will go to plus 2,700, and that will go to the sales account. Everybody happy? Sorry, let me just change this. Inventory reduces on the credit side because it's an asset. Assets decrease on the credit side, and cost of sales is an expense. If I go down to this list, an expense increases on the debit side. Guys, I'm going to close off the session there. Do you guys have any questions? I will stay on a while for any questions that you guys might have. Please go through the rest of the study guide on annual financial statements and make sure that you understand this level of thinking about the various accounting topics. In our next session, which you will be invited to, we will be dealing with IAS 2, which is inventory. But that concludes my presentation for tonight's session. So if you guys have got no other questions and don't want to stay behind, you're welcome to just make sure that you've given your student number in the comments or the message, the comment section, and then that's it. Thank you, guys. Any questions? I'm just going to close my camera and mute until there's any questions.
Hi, Mr. Comfort. I can't send my student number on the comment section.
Olelo, can I just check?
Yes.
I can just see that you joined the meeting, but I can't see that you've given your student a number.
Yes, because it says administrator has disabled chat for user.
That is very, very strange. Let me just see if I can activate it for you.
Okay, thank you.
Just bear with me.
All right.
Okay, guys, I will sort out the access to. I see there is a problem with the chat section for some of the students. I'm not entirely sure why, because it's supposed to be open to everyone. So what I will do, if you guys can just take down these details, and please send me an email confirming your attendance for tonight's session. My email address is, just see if I have it for you here, that I can just put the information on the screen for you. Okay, no, I don't have that, so I'm just going to type it for you. Can everybody see it? You guys, I'm muting again until there's any other questions.
Mr. Comfort, is there a possibility maybe to get a copy of this recording, or it's not possible?
Sorry, I was just on mute there. Just repeat your question. Olelwa, can you just repeat your question?
Was it possible to get a copy of this session, or was it not recorded?
It has been
Yes.
recorded. Adele, can you just help me with that
Yes.
answer, please?
All the sessions will be recorded and they will be available to students on YouTube, and you should give us about 48 hours. Of course, this is the start of all the sessions. Just give us a few days and you will have access to them. All of them. All of the time.
Thank you very much.
Okay,
thank you.
Adele, sorry, while you here, Xolelwa also had a problem with signing the attendance by entering her student number in the chat area. It says that the student is disabled to chat in the meeting chat.
I know. I also experienced that when I went in through a different browser earlier this evening, Charles. I posted a link to an attendance register that I would like everybody to get used to. Complete that, and also the little evaluation form with 4 questions. If you could also just click on those links or copy and paste them and put them into the browser and just submit it's going to take you a half a minute to answer those 4 questions.
100%. Adele, I'm just sharing my email as well as we discussed, and if they have any questions, they can send me emails.
Charles, I want him to just wait until the query form is ready.
Okay.
They can submit in time, but in future we would like to have a record of the query. So if they, as soon as it's ready, by next Monday, that they use the query form, they will have the link to the query form all of the time. So
100%.
Just for your purposes that they use that, but in the meantime, they can send you emails.
100%. Thanks, Adele. Okay, guys, if you have got any other questions, I'm staying online. I'm done with the presentation. So if you've got any questions, please feel free to ask.
The first assignment, Mr. Comfort, is due almost tomorrow. So if we get stuck somewhere, can we contact you for help?
I'm glad you asking that question. I can give you guys the let me just make 100% sure the new assignment dates. Adele, you are still?
I'm here.
Okay, 100%. I just wanted to make sure that you are covering my back here.
Yes, you can share the dates. It comes straight from the college.
100%. Thanks, Adele. Okay, so the new date for submitting the assignment for FAC2601 is 4 September. Did everybody take note of that? The new assignment date is 4 September for assignment 1, and for assignment 2, it's the 25th of September.
Charles?
100%. Yeah, hi,
I was just wondering, did the student get the message from the college yet about the assignment dates?
Sorry, Adele, you were a bit unclear there. I didn't hear you properly. Sorry.
Have the students not received the new assignment dates from the college yet?
Can I ask you guys, let's test the hand functionality. Everyone that has received the dates to for the new assignment dates from the colleges, please click on the hand right now. Xolelwa, you are sharing your video. I just don't want it to eat up all your airtime or data. Okay, Adele, I can see on my side, and I'm not sure whether you can see on your side. Only 3 people are confirming with the raising of their hands that they've received it from the colleges.
Okay. And do they agree with the dates that you just mentioned?
Can I ask the 3 guys, so the 3 people that have raised their hands, can you just confirm with a yes? Just unmute and say yes. You've just say yes if it agrees.
That's correct, yes.
Okay, perfect.
Thank you, guys. Much appreciated. Then I will also in the comment section put the new dates. So if you can just give me time, I will put it right there. Then you can note it. So first assignment must be in on the 4th of September. Second assignment must be in on the 25th of September. I've put it in the comment section. Any other questions that you guys might have? I'm staying up on until 5:30, and if you guys have got any questions, please feel free to ask. So guys, just a closing statement then from my side until we get the query forms. You are welcome to submit any queries that you have to that email address that I've given. I will then make sure that when the query forms are released, that I send you a query form, even though I might have already dealt with the query. Then you can just, to make it official for UNISA admin purposes, you can then just complete that query form. But in the meantime, please make use of the email address and submit any queries that you might have. One thing that I also want to deal with is let's talk about the assignments. I am not permitted to do the assignments for you. That should be logical, but you are welcome to, as you do the assignment, and there are stuff that you are struggling with and you feel that you are lacking a specific skill or understanding, you can contact me and we can deal with the problem. But I can't do the assignment with you or for you. I'm just saying that because I've had those requests in the past. So please just make sure about that, and then yeah, assignments have been moved, so you guys have more time to complete them. But guys, I think that is it. Thanks for joining. I hope it helped you a little bit. Please prepare for the next session. That is crucial. Don't attend these sessions without having prepared. It is extremely important that you also do your bit, and together we can make sure that you pass this module with flying colors. So all the best for preparing, and then I see you guys next week. Please see the invites that will be sent by Unisa.
Charles, the last word from my side, just for students to complete the evaluation form. And then I would like to know whether everyone is comfortable with this evening and this time for the module. If they're not, then they must also just put that in the chat section, please. We can't promise, Charles, that we can move the meeting because you also have other modules to attend to. But, let's just see.
So 100%. So can I ask guys, before you leave, can you just raise your hand if this time and evening is suitable for everyone? Please just click on the hand so that we can just make a note of that. Apart from two people, it seems like everybody's happy with this evening.
Mr. Comfort, I'm also happy, but I don't see where I can show offhand.
Guys, I'm quickly for those that are struggling, I'm quickly gonna unshare my screen and share the screen that we are on. If you can just bear with me. I hope I'm going to be able to show you guys. You guys can all see the team screen now. Oliver, can you put your unmute your mic?
Okay, yes, I can see it.
Okay, do you see there's a hand there?
There isn't. On my screen, there isn't a hand.
Okay, we'll have to see why there isn't a screen. If you click on those three dots.
The three dots, I see them, yes.
Just if you click on them, see if there isn't any option of raise your hand or something like that.
I only see put me on hold, share, turn off incoming video and dial pad.
That is very strange that you don't have a hand there. I'll figure it out. I'll do some checking and see if I can assist you on that regard. But thanks for mentioning it. Hopefully in the next session I'll have an answer for you.
So,
okay, thank you, Mr. Comfort.
Oliver. Adele, yes.
If the student is on a cell phone.
Oliver.
Please repeat that question.
Are you working from a cell phone?
Yes, yes.
Which cell phone?
It's a Hawaii P30 Lite.
Okay, Charles, just note that for us because sometimes it's a cell phone issue, so we can just check it out.
100%. But we can follow it up and see what the problem is. But yeah, thanks for the question.
Thank you very much.
Okay, guys, I'm gonna log off now. If there aren't any further questions, thanks for joining in tonight, and then we will see you guys next time. So I'm gonna do the going, gone. Thanks, guys. Good night, and enjoy the rest of the evening. Bye-bye.